Traders, good morning and welcome to this live trading webinar. I hope everyone is having a great time so far, wherever you are in the world. I hope you have a good weekend, and we are ready now to start the trading week with new goals, of course, with fresh mind. That's the most important, right? So, how are you guys doing today? Please let me know. You can simply use the chat box below to communicate with me and ask any questions you want. Hello, Ford. Good morning. So just to make sure that everyone understands that this webinar is for general information only and is not intended to provide any trading or investment advice or any personal recommendation. Please be aware that today is Monday, and as usual, we're going to have the weekly fundamental analysis in terms of podcasts. So later on today, I will record it and upload it on our website, and you can easily access it. So let's have a look at the Premium Analytic portal and the calendar, of course. But let's start with the Premium Analytics. Usually on Mondays, we have all the outcome of the events happen on the weekend. First one is from the Japan. Bank of Japan Governor Ueda will continue monetary easing for now, with inflation to start slowing down soon. First Republic earnings report to shed light on depth of bank crisis, why the banking mess isn't over, why the stock market is so frustrating right now. Bud Light brew put to executive on leave after uproar over transgender influencer. Ukraine gears up to hit Russians and show West it can win. Israel's Netanyahu says he's willing to meet with Florida's Ron DeSantis. Libya seeks U.S. help in fresh effort to recover Gaddafi billions. J&J Consumer Health IPO process to kick off key test for moribund new issue market. 40th third quarter iron ore export steady. Amazon, Facebook, Google headlines busy earnings week for tech. We're going to talk about this also on the podcast later. And tech billionaires bet on Fusion as holy grail for business. And here's the description if you would like to read yourself later on. And let's check the calendar for the week. Usually end of each month, the events are kind of actually the last week of each calendar month. We don't tend to have that many news events. Some of them are the IFO business climate today on Monday, the 24th of April. It will affect the euro, of course, because it's going to be in German. Tomorrow, nothing. On Wednesday, we're going to talk about the Wednesday swans, but let's focus for this one today. Good morning, Larry. Cherry, hello. Sydney, good morning. Time to check the MetaTrader 5. So let's start with the pound against the US dollar. Slowly, as I mentioned in another webinar, I will start introduce you to the implementations of the RSI. I will go through all the indicators because I believe for technical traders, they are valuable at some extent, at least to understand how to use them. And unfortunately, I see a lot of traders that they put the indicators, but really they don't know exactly how to use them. They have an idea, and sometimes they look at them, sometimes they don't, because they feel that, okay, for this occasion, it's okay, it's irrelevant. It's just they don't understand when to look at each indicator. So because you guys told me that you use a lot of the RSI and the MACD or MACD, I'll start with these two. They are among the most popular indicators. And of course, it's been a while. I have the moving averages just to spot the trends. It's much easier when you monitor so many markets. If you are purely trading price action, I do so support resistance. It's the concept of technical analysis, and that's what we do here. But also, it's good to understand how you can use some indicators in case you want to use them or you want to try them. So let's start with the weekly chart, and this is the pound against the US dollar. The last point, the price traded 2 weeks ago, it's this one here. Now, Theo, is it relevant to look at this high and this high? Not for now. The only thing it's relevant right now, it's the recent price action. If we are day traders, on end of day traders, just a few weeks before we need just to put our support resistance, or if something is very obvious like this one here, we can use it. But the price, it still have 110 pips until this level from this resistance, based on the fact the price now is still 137 pips from this first resistance, and from the second one, it's more than 250. That's why we just put the first one, and we're going to have a look at the other later on. Price last week, it's just stayed within this area of consolidation. We are at resistance, so we should expect some retracement. However, the market is making higher highs, and therefore we're going to look to buy unless what? Let me bring up my drawing tool. So unless this area of support is being taken out and the market is going to make a lower low, then and only then we're going to start looking for a transition of the trend. By that time, we are in this consolidation period. Now, because clearly we do have the structure of a ranging, that's the 1, 2, 3, and 4 points. You know that we need 2 points to draw any line. So below the current price, that's our support. Above, it's our resistance. So we have 1, 2, 1, 2. We can draw it as a rectangle, or we can draw it simply as support and resistance concept. And we buy the dip and we sell the rally. Now, the oscillator is best to use on ranging markets. Once we confirm the ranging market like this one, it's the RSI and any bounded oscillator like the stochastic or the commodity channel index and many more. But for here, I'm going to just use the RSI. And how do we use the RSI? First, we check the overbought and oversold condition when the price touches the support and the resistance. When the price touches the support, we want to have oversold conditions. And what does it mean, oversold conditions? It means that the indicator will come below 30. If the indicator comes below 30, that's the oversold. And if the price is at support, then and only then we look to buy. If the indicator is at the oversold, but the price is not at support, we don't do anything. Same with the resistance. When the price is in an overbought area, then we look to sell only if the price action is at resistance. All right. Now, in case we're going to spot some divergences around here, so price make equal low and the indicator make higher low, it's a very strong also signal to take. But for now, the indicator is just in the middle. It doesn't show anything. So we are in the middle of nowhere. We can hide the indicator. We don't need just to pay too much attention all the time to the indicators. We just understand how to use them. We check if the signal is there. Otherwise, we move onward. So for this one, flat now. Euro US dollar, we are in an uptrend. Market is making higher highs and higher lows. Therefore, we're going to look to some bullish activity. Now, it's been 1, 2, 3, 4 days in a row that the market didn't push higher. In an uptrend, when the market, the character of an uptrending market is when we see the red candles. Once we spot the reversal, the green candle, the market should start making higher highs and moving away from each previous candle. In this, and you can see the character of this market doing that here. Price dipped and then bounce upward. Then price dips and then it bounce upwards. 1, 2, 3 solid green candles. Here, price dips and it struggled to bounce. So it shows that the trend is running maybe out of steam. So maybe we better just find another market to trade. Australian dollar, US dollar. Technically, we are in a downtrend, as we can see from this move, and we enter into this area of consolidation. In a downtrend, this area of consolidation usually it's break to the downside and continue. It acts as a continuation pattern. However, when you see the consolidation, it takes more time. The price is within that consolidation for more time than it was trending. What does it mean to you? It means that the traders and investors who used to actively selling this one, it's been a while that they stop, and it looks like the market is not just stopping to catch a breath. It's maybe trying to decide what it wants to do from now on. So it looks like if we want to trade this, we're going to try to find some reversals around the bottom if we want to buy, and some reversals around the top if we want to sell, or if we're going to see a clear break to the downside and the market is going to make our lower low here. We do have these lower highs. Then we're going to look for the rally to sell it somewhere here. So the majors today, they don't help us. Very clear though, major. I just didn't finish my sentence. Okay, a very, very clear major currency. It's the Kiwi now against the dollar. Very nice downtrend. So if we do our analysis, we can draw a trend line. We need 2 touches, and we have 4. We have 1, 2, 1, 2, 3, 4. Market made lower highs, make lower low and lower highs. We are in a downtrend. We have this trend line. The moving averages, they are apart. When the market is trend, the best indicator to use is the MACD. It's the MACD. When the bars, when the histogram is below the 0 line, the only thing it shows to the only thing it means is that because there are 2 lines in the MACD, there is the MACD line and there is also the signal line. There are 2 lines. So the MACD line, if we call this signal line and if we call this MACD line, the MACD line, when it's below the signal line, it means that the market is in a downtrend or the market is moving downwards. All right. When the signal line is below and the MACD line is higher, it means the prices are inclining. Okay, and also we can spot some divergences on the histogram, but the most important part that traders, they don't know, because the available sources on YouTube, they are sometimes not very high quality information. So I'm telling you exactly how this histogram they plotted. What do they represent? Above zero, you know that the two lines, the prices are inclining and they are declining below the zero. Now, when you see the histogram getting wider, each line is getting higher than the previous one, it means the trend is getting stronger, okay, and the direction is still on the go. When it goes smaller and smaller and smaller, simply it means that the price is retracing. It doesn't mean the price changed trend. Price just retracing. If it's going to change trend, we're going to find it out with the higher highs and higher lows in the price. All right. So what we understand here is that the lines are below the zero, and they are getting wider. It means there is likely strong trending, and there is a downtrend developing at this point, because the price made lower highs and lower lows. So what we're going to look, for the price to retrace on this time frame. We are looking the price to retrace somewhere that it's going to give us a good entry to execute. Where is our area of take profits, or at least partial take profits? It's down here. How many pips from here? It's about 47. So another trader, they might be not looking the daily chart, they might be looking the hourly chart, and that's totally fine. Exactly the same concept applies here. Lower highs, lower lows, downtrend, MACD, RSI, same concept. I just do it on the daily chart. You can do it on any time frame. USD, JPY, for the very short term, we are in these higher highs and higher lows. We have the trend line here. Here it's a good area. We still didn't see any strong reversal price action. If we're going to see any strong reversal price action, we can start looking for buys at this point. But if the price is going to retrace a little bit more, then we're going to look to buy from there. Now, some traders, they may choose to, they say, okay, this is a higher high, that's a higher low, that's a higher high, that's a higher low. This is this doji candle, it's a bit more of rejection here. So what I'm going there for, they're going to put a buy stop here maybe, and it's nothing wrong with that. We can put a stop loss below here. So we buy here, our stop loss there, and we do expect to target this area here. It's a very solid reward to risk. USD Canadian dollar, the downtrend is over. Market break the structure, reversed 100% of its move. Did we have an early indication from the indicators? No, we didn't. Price made lower low. Indicators made lower low, so no divergence. Doesn't mean that the market is not going to change direction if the price action decides to do so. So we have here a higher high. Yeah, we have that high, higher high. If we're going to have some retracement and rejection in an area of fib retracement or a trend line, we can start looking for buys. So the selling opportunity was here and we trade quite actively. It ends and now we are going to look for buys. Euro JPY, very strong uptrend. This trend line is very steep though, so ideally we want a trend line around 45 decrease the angle, something like that. But we do have this area of broken resistance. It can act as a support. I'm not going to look to buy here. It's very shallow, and I will prefer the price to come and retest this area here, that it's a resistance, broken resistance, and it can act as a support. Therefore, I'm going to be waiting for this one. Pound, the same. If we draw FIB from this swing to that swing here, we see that the market didn't even come to retest this 50% area. I hope that it's going to come to show some weakness around between the 50 and 61.8, so we can start buying. Australian dollar against the Japanese yen, very weak so far. And we also, I'm not going to look to buy, to be honest, because it's not a strong currency. Good morning, Theo. Good morning, guys. Hello, hello. Euro USD seemed like it will push past 1.0999, but it kept falling. Yes, Darshan. Look, we're going to see some retracement, some price action, rejections, and we're going to act upon. Also, the QE is very weak. Therefore, we don't look to buy it. Very strong uptrend developed with the CHF JPY. It's everyone agrees that this is a strong trending market. Everyone agrees that we are buying. So when the price it's going to retrace around this area of support, we're going to most likely look to buy if it's going to stop and reverse here. Okay, we have our plan, so keep an eye on that. Canadian dollar and the Japanese yen, price came to 50%, although it didn't put any price action reversal. Now, some traders, they might be looking to buy here with a limit order and a stop loss maybe somewhere behind the 61.8 and try to capitalize on the move to the upside. But what I do, I don't know why we don't have it here. Let's just put the other level, the 76.8. So these are 0.76.4, and here is the 76.4. So what I do when the market is not reversing with a price action at 50%, if I want to enter, if I see a strong trending market and maybe I'm not going to be around and I want just to place a buy limit order, I will use the 61.8% area, this one here, and I can put a buy limit order and I will use a stop loss below the 76.4%, because in a strong trending market, we expected to see a retracement to stop maximum at 66% of the move. So if it breaks and moves beyond, most likely the trend is not that strong. And based on my back testing, a buy limit here, a stop loss just below here, it gives 3.3% reward to risk, which it's a brilliant reward to risk. Imagine you make 3.3 or 3.5, you risk, let's say 2% as an example. So on every win, you make plus 6.5% or plus 7%, and on every loss, you lose just 2%. Overall, it's a very high probability game, this one. The euro against the Canadian dollar, it's moving higher. The area of resistance is this one here. Therefore, we can look to buy. if you are trading the 4 hours, the 1 hour charts, a very, very nice trends. And I call them nice trends because we see they do respect moving averages. They do respect trend lines. We just simply be patient and look for some areas of intersection between some trend lines and support, resistance, or FIPS, and we can just buy in this uptrend. Now, because I do trade daily charts and I don't look at the 1 hour charts, I'm saying all these concepts can easily be applied on each and every time frame. Excuse me. However, I just use a daily chart because it's easier, and that's the one I trade anyhow. Euro CHF, it looks like it's a strong currency, but the euro, it's also strong currency, and the pound, therefore, it's easier if we want to buy the Swiss, we can use the Kiwi that we spot today that is weak, and the Australian dollar, we also spot it's weak, and we can trade Australian dollar Swiss to the downside and Kiwi Swiss both to the downside. Euro pound, very mixed here in a long consolidation. Not interested. Pound Australian dollar, bullish engulfing on Friday. Market cap trying to push higher. For the daily chart, it's not a high reward to risk. It's not favorable. Now we are in the development of this pattern. If we see rejection, this pattern, it calls ascending triangle. And if we see a rejection here and the market comes somewhere here and reject it, I will try to buy and hold for the breakout because it's an ascending triangle pattern. It has bullish implication when it's found in an uptrend. And if you measure the base, the distance from here to there, and you replicate it at this point, we're going to find the minimum target. And trust me, if we spot a good ascending triangle and we buy the dip, it's a very lucrative reward to risk ratio. But if this develop the way I'm expecting to be developed, I'm going to post it on the Telegram channel. So you're going to have exactly the idea of how do we trade these ascending triangles. Pound Canadian dollar, it's at resistance. If we're going to break and move higher, we're going to definitely look to buy. We talked about the Swissy. Of course, the pound New Zealand and euro New Zealand, they are very weak. Sorry, they are very strong. Therefore, we're going to look to buy them. Let's check the which one it's now. I think the overview. I think it's this one here. Let's just check the indices, and we can come back to. That was a wrong one. Guys, do you hold any trade from last Friday or something? So that's not. Yep, that's the right one. So DAX, we had this bullish engulfing on Friday. Now 5-minute chart, market is market open. Here is my buy stop. Up. Here is the buy stop. I didn't go triggered because I didn't had. Now I got triggered. I didn't have the order there. If the market is going to move beyond this area, that's where the stop losses, they should be placed based on the strategy of the London breakout strategy. If the market is going to keep rallying, we're going to give it about 10 points and we're going to just leave it. The FTSE 100 daily chart, at this top 5-minute chart, it's a nice 5-minute downtrend. If you are trading trends in the 5-minute chart, 15-minute chart, that's what you want to look. You want to see strong impulse, some correction, and then the price to continue. Dow Jones, that's the weekly though. Still in an uptrend here, but it's a bit messy. Daily chart on the Nasdaq, also this uptrend. Market, it's make higher highs. Now it's stopped. It's trading within this rectangle. That's what we call, let's say we're going to call this bullish flag because it looks like a flag and it has bullish implication. Usually we find this pattern in the middle of the uptrend. If we're going to break to the upside from this point onward, then we're going to have a minimum target this distance. So from this to this, so 152, we replicate it and duplicate it and find the minimum target. FTSE, it gave us more than 10 points, so I'm going to close the trade. That was for the scalping. Okay, the stop loss, the price didn't even come close to the stop loss area. So if you traded with me the FTSE, it looks like you should have a good outcome. So let's go back to our default one and check the gold as well, WTI and the Bitcoin, because there are traders, they trade this one. Darshan, I hope you take the DAX, yeah? So let me walk you through the Aussie Swiss and the Kiwi Swiss. Traders, we see on the daily chart, market is making lower highs, lower lows. It's been a while we talked about that we're going to still looking to sell it. On Thursday, I wasn't here. We didn't talk about any of this price action. On Friday, the market took over. Today, it's still moving lower. Now, just be mindful that it's not because we spot divergence in price, like from this point to this, the price is making lower lows. From this point to that, the price is making higher highs. All right. We are still, and something that traders, they don't know when they trade, when they use the indicators, and please pay attention to that. That's how the RSI works. When there is a middle line and there is the 50 area, I will encourage you to add it if you're going to use RSI and parameters, color levels. You can add the 50 level. 50 level is the middle of the RSI, and when the RSI line is below the 50 level, that's bearish. When the RSI is above the 50 level, that's bullish. Therefore, now RSI is below 50. We are still looking for shorts, but we must understand that the market, yes, it put the bullish divergences. So maybe we're going to experience some buying pressure. Also, traders, if you are using RSI, you learn from today that Welders, on his books, he mentioned that on the RSI, you can use it with trend lines as well. You can draw trend lines. And if the RSI breaks below or above the trend lines that you treated among with the price action, and your technical analysis. So market now is making lower lows, lower highs. We are bearish until we're going to see some evidence of reverse. So there is a first level here of support. The market can stop and reverse somewhere here. If it's going to continue, then there is another, the next level, it's this one here. So when the price comes up to this area, we're going to be careful, and we're going to, if we are still in trades, we're going to make sure to take some profits and so on. Okay. But for now, if you decide that you don't want to sell it due to the bullish divergence found it here, on the meantime, you don't necessarily need to buy it. Okay. And the Kiwi CHF, same, lower highs, lower lows. On the weekly chart, let's zoom out to find the next area of support. It's down here. It's that low point of March 2020. So if the price is going to come here, we're going to be a bit cautious. The gold, with the gold, this head, this neckline, if the price is going to come and reject somewhere here, we're going to have the head and shoulder pattern, and we're going to look to sell it. Now, I'm not bullish because the market broke every structure here. This is not a very nice trend line for me to trade it. And the buyers, they didn't push the prices higher. So I'm not interested. I will be more interested if I see rejection around this 61.8% or this 76.4%. If the price is going to push higher and it's going to stop and reverse around this area, I'll be very interested to sell it. Because most likely we're going to have the development of a head and shoulder pattern. We are in transition period now, so we don't do anything. BTC, bearish divergences here in an oversold, in an overbought area. Price made higher highs, indicator made lower highs. Also, the histogram make divergences. Therefore, we were expecting some correction in the price. Now, if it's going to be from this point to this point here, and the price is going to come to 38.2 or 50% or 61.8, we're going to see it when the price is going to move backwards. But a strong area of support, it's exactly the 50% based on this FIP area that coincides with this high in the market. And WTI, I told you I'm fully bearish with this one. Fundamentals, they don't, okay, supply and demand lead price action, lead the market. Sorry, the price action lead the market. Fundamentals, once they become known to the public, to us, unfortunately, they are irrelevant to trade them unless it's something, it's totally changed the direction. And yeah, but on this occasion, we said that this gap, most likely it will be filled, and I was bearish all the way. I'm still bearish, okay, in this one here. And yep, that's it. So, guys, any questions, please use the chat box. I don't see anything here. We miss you. I miss you too. Yeah, it was a little bit difficult last week for me. So, anyway, we are back now and continue our sessions. Guys, I hope you find a lot of value in this webinar. Trust me, you're gonna learn a lot, and you're gonna understand how to trade and become a skillful trader. Stick around with these live trading sessions, and I'm sure you're gonna all in all the sessions you're gonna gain some value. Okay, so I wish to everyone to have a fantastic day ahead. Be safe. Enjoy your day. Happy trading. There are lots of trending currency pairs, especially on daily chart. On the lower time frames, of course, there are too many trending markets every single day. So happy trading again, and I look forward to see you tomorrow at the same time. Thanks, everyone. Bye-bye.